Hello again and welcome. This is Robert Schein, Managing Director and Partner of Blanke Schein Wealth Management. Today is Tuesday, the 30th of March, 2021. We're going to go through our headlines of the day, what traders are watching, and a recap of what's on our radar. So thanks for watching. So our first topic today, this morning on CNBC, Jim Cramer acknowledged that inflation is abundant. In fact, everywhere is the quote he used, all across our supply chain. Obviously, we saw the ports, the Suez Canal over the last week or so really put global trade to a screeching halt. Did you know this, that 93% of all retailers right now are reporting a 3 to 4 week delay in all of the basically port congestion that they're seeing? If you wanted to add another layer of just the imbalance of supply and demand in the marketplace that we're seeing today, right? We have a healthy economy right now, or at least growing towards a healthier economy as measured by the GDP and all the ample sort of stimulus that's out there. There's another $3 trillion that's proposed for another stimulus bill right behind the $1.9 trillion that's now worked its way in the system. But the port congestion really on an 8.2% retail year-over-year increase in retail sales, which is what we're seeing right now. And the M2 money supply, I have it right here, it's plus 20%. What that means is it's just money in the bank, money for corporate America, money for retail America. Obviously, a lot of Americans just qualified and they are receiving their stimulus check in the mail. So all that money is basically the supply and demand, right? We have pent-up demand. People are now getting the vaccines and they're feeling safer to leave their house. You've got restaurants and retail and leisure opening up. And as all of these collide, you're going to see inflationary pressures. You know, Mattel just announced that they're even having difficulty with the pricing of Barbie because of the plastics are being, commodities as a price being increased year over year. Now we're seeing also oil is stabilizing last week or so, but it's up year over year. And you're seeing all the rest in housing. Our housing numbers are what they are. I mean, you're getting the real estate updates as well as I am. It's super hot, right? And so with all of this right now is that perfect storm. So is inflation transitory? Is it a moment in time or is it permanent? Now the Federal Reserve Chairman Jerome Powell believes this is that sort of effect post-COVID, post-pandemic, where you have supply coming back on, meeting demand, which is twice the supply or the ability to execute. And this is what you're going to get, temporary little inflation spikes here and there. What am I saying? Why is this important? Why is this relevant? Again, as Jim Cramer pointed out, you also have to be mindful of your investments, right? So your money in the bank, and basically that is basically going to, it's quicksand. As money and banks are not paying us, we need to put it to work. And you're seeing all these other environments where money is actually growing faster than inflation. And that's basically the design by the Federal Reserve as a result of all of this. Now you add in all the additional spending. And yeah, so we're going to see increase in all of that. Now the 10-year Treasury was a 10-month high right now. It just hit 1.77% this morning. Which then takes off the growth trade of growth versus value, growth companies. Think all the big tech companies. When interest rates go up, growth slows down in terms of their potential to earn in the future. It's a discounted model, and so that's why you have to pay attention to interest rates, because it does affect your investment portfolio equally with the value. So I think financials are doing extremely well as inflation or even interest rates try to keep up with inflation. And why are interest rates going up in the first place? Simply because it's forward-looking as to the health of the U.S. economy. And it really is saying, wait a minute, we could have in the third quarter of this last year, as soon as we get done with March, we'll find out in the next couple of weeks what the first quarter of, the first quarter this year, what the GDP run rate is, and there's talk on Wall Street of above 6%, 6 or 7% for the first quarter. I wouldn't disagree with that because of the 10-year Treasury. The bond market is pricing in a better, healthier economy. So that's the goal of what the Federal Reserve is doing. That's also what Washington's trying to do, is also sort of bridge that gap by adding all this additional dollars in hands of Americans. And you know as well as I do, I keep bringing this up, if you give $1 to majority of Americans, they're not going to save it. They're going to, when they finally can get out and start spending it, they're going to spend it in the U.S. economy. And 2/3 of our economy, as measured by the GDP, are by U.S. consumers. So this is all coming to head right now. And in the short term, we're managing portfolios effectively and efficiently and navigating the volatility and taking advantage of great opportunities that are out there. Again, if you have bank cash that you want a little bit higher rate of return, we have a cash management solution for that. Or simply put, you want to put money to work, we're happy. We're taking those calls on a daily basis here at Blanke Schein Wealth Management. But that's a recap of ultimately what we see around the world and what's going to continue to sort of frame this up and really be the litmus test of if this 10-year treasury is correct, meaning that the economy is heating up and growth is taking hold. Well, we're going to watch what Friday's job number is. Now, keep in mind, Friday, the market is observing Easter. So Friday, the markets are closed. But still, we have the economic data being reported. And we're going to look at the jobs number. There are some preliminary indications that this could be the hottest job number that we've seen in quite some time. Again, supporting why yields are up and supporting why we're having sort of a supply and demand crutch, but more importantly, the inflation is creeping in. So make certain that your money works as hard as you do and stays ahead of inflation. If you have some questions or you want to discuss this topic further, please feel free to give us a call, shoot us an email at Blanke Schein Wealth Management, or any one of us here. We're happy to help. That's our update for today. Thanks for watching, and we'll catch you next time.